So, like that, I would like to welcome you to our first webinar. And as everybody knows, I posted on Women Rock Switzerland to get people interested in the idea of Alpine Property Investment. And the idea today is that I'm going to spend a moment or two just explaining who I am. And then I'll introduce you to my husband, Dave Elliott. And then he will talk to you about the Swiss property market, about financing, investment, all those things that honestly, I don't have much knowledge or information about. And then he will also be open to answering some of your questions. So if there's anything, you can pop it in the chat, and then later in the process, he will be more than happy to talk to you. So I'm just hoping that everybody can actually see the PowerPoint. If you can't, please do let me know. But we'll get started. So, as I say, this was inspired by all the wonderful work that I see on Women Rock Switzerland, and I usually show up there quite a bit from a personal perspective, but also because I have found it a useful tool as an interior photographer. And obviously, as an interior photographer, I do some work with Dave, but I also work with other real estate agents. I work with architects, interior designers, as well as private property owners who themselves want to market their Alpine chalet on things like booking.com and Airbnb. So I guess this is probably the best point to let you hear about what he is talking about. So here you go.
Hi, so I'm Dave Elliott. I'm very happily married to Angharad, and as we've gathered, I am in real estate. So thank you very much for inviting me and us to host this webinar. It's a real honor. It is our first one together, so it's a little bit on the nerve-wracking side. Please don't judge us too harshly, but it is wonderful to be able to share our experiences and our knowledge with you during this. So bit of background from me. I'm actually not a long-time real estate person. I've been involved for about 5 years. Previous to that, I was in the hospitality, and now I've happily found a niche working from Verbier, covering the French-speaking Swiss Alps and allowing both Swiss and foreign buyers and sellers to be able to participate and achieve their real estate objectives. So on a personal note, as you can see from the slide, we are also interested in building our own property portfolio. So we're always learning, not only from a professional basis, but from a personal as well. So a little about the Swiss market. So the Swiss market, as people have probably noticed, has gone a little bit crazy over COVID. There are certain areas which have really expanded. Now, one of the areas that is at the top of this is Verbier. So we do have first-hand experience of watching prices shoot up quite substantially over the last 12 to 24 months. And this has not been reserved only for the mountain areas, but that's what we're going to stick to today. I believe I need to open a Zoom for myself. So, excuse can we just pause ourselves for a moment? And I don't have the ID here.
Oh.
Can you just mute us for a second?
I'll have to do it. Just can I read it? Just
Okay. So apologies for that. So again, thank you for your patience. So yeah, you can see from the slide we've got a number of the
no.
Okay. No, next one.
Oh.
Yeah. Okay, so as you can see from the slide, there's a list of resorts throughout both Switzerland and France and Italy, and you can see some of the movements in the per meter franc price, but there's been some increases, on average 4%, and some of the top resorts that might be close to double that. Certain of the lower resorts, less popular resorts, that might only be about 2%. So there's still good value to be found across the market. So what we have noticed, particularly in Verbier, is there is less property available on the market. And this is also mirrored in certain other resorts. And this is due to a number of factors. First of all, being the owners actually using the properties themselves. Second, higher demand for seasonal rentals from people who want to escape from the cities, and that has created a pressure upon the seasonaire rental market, and that has seen an increase in prices, which is interesting from an investment point of view. Next slide, please. Thank you. So, yeah, some of the areas where I'm familiar, and please, I don't understand the whole of the Swiss market. I do stick mostly to as I said, the French-speaking Valais and a little bit in Canton Vaud. I do have colleagues who can deal with other areas, but we are going to speak just from this general area. So Verbier, I mean, who doesn't know Verbier? Verbier is a great place. It's a wonderful place to have in our backyard. The skiing's amazing. It brings every kind of person here from every part of the world. It's eponymous. Everyone knows it. And it still maintains a fur and diamonds aspect alongside the Gore-Tex. This is one of the reasons why we love it here, and it seems like everyone else does as well. So that links into the Four Valleys. Now, the Four Valleys is great in the sense that it gives you access to Verbier, but without the price tag. So you can often get a similar sized property as you would in Verbier for anywhere from a quarter to a third of the price. You get the full same access to the skiing, and some really exciting villages, beautiful chalets, beautiful apartments, and it's still accessible to Lausanne, Geneva, Zurich, Bern, all of the major airports and cities. Also working a fair bit across Crans, Montana. Crans, as we know, is famous for James Bond. It's famous for golf, even known a little bit for skiing, and it's having a bit of a resurgence at the moment. There's quite a few new developments going on there, and will be going on over the next few years. And there are some great opportunities if we were to roll back to the previous slide, which you can see in the, not necessarily you can see in the previous report. You see there's a huge variation in the per meter price. You can pick up some really good value apartments right up to 40,000 square meter chalets. So very interesting. Also looking at places like Villars-sur-Ornon. Villars is well known, as is Crans, for the international schools. Now this is a potentially good investment, quite simply because there is always a demand for both families and students to come and visit and to stay while their children are in school. So, okay. That's a little bit of a touch on that there. So one of the questions which has been communicated to us that people are really interested in is, what does it take to actually get to buying a property? And buying a property is fantastic. Everyone thinks, yes, I'd love a property in the mountains or by the beach, but we're in the mountains. So Swiss market is quite particular. It's a very safe and stable market. And because of that, it requires that the barriers to entry, or the requirements for entry, are quite high to maintain this stability. So apart from certain regulations restricting the purchase by foreigners, the internal market is characterized by requiring a substantial amount of your own money in order to invest, and then being able to calculate the repayments as well as other costs that are not imposing upon your daily budget. This is the objective of the Swiss government, the Swiss property market, and as we've seen, it doesn't have the same fluctuations as you may see in other countries such as the UK, the US, or even France and Italy. So, looking at a secondary residence, in most cases you will need a minimum of 30% of capital. Depending on your relationship with your bank or your certain other elements, maybe a little bit less, but it also may be a little bit more. For a luxury product, for a 10 million plus chalet, could well be up to 50%. So but we'll work on 30 for the basis. And while you're doing your calculations, we work on a rule of 3. That being your anticipated cost of the property should not be more than 1/3 of your income. So this includes any existing mortgages, leases, such as a car, any school fees, things that will be guaranteed to be going out. And then when the bank is making their calculation, they will use a hypothetical interest rate of 5%. Now, I know that seems crazy, and it is a little bit, because we all know interest rates are around 1% at the moment. But this is to ensure that you will not be put in any financial difficulty should there be any sudden changes in interest rates. Interest rates fixed versus variable, we can go into that another time. Right? So I've done a little calculation there, but this will help you when you're actually budgeting as to what you might like. What are you going to be looking at? Can I afford it? And just work back from there, the rule of 3. You will be able to tell from your own income what you have available and what therefore can be invested into a secondary residence.
Yep. On to the next.
On to the next, please.
You don't want to explain the idea of the 1 million PPP and all those sort of things?
I suppose I can, but I think it's just as easy on the slide. If anyone would like me to go into it later, I'd be happy to do that. I'd be happy to look into it into a bit more detail. But for the moment, I'll just leave it as a hypothetical on there. And certainly if anyone wants to talk about it in detail, I can give you general advice, but you're much better, you're much safer talking with your own financial advisor, whether it's your bank or private advisor, as they will be able to do things for you. We've got someone's got their microphone on.
Yeah.
And whoever's, is that Erin?
No, it's Melinda.
Do you mind muting yourself for the moment?
I was going to ask a question.
Well, just if we can hold off all the questions, just pop it in the chat. And then at the end, Dave can go through. Yeah?
Yep.
Super. Thanks.
Okay, thank you. Thank you, Melinda.
Oops.
Okay. So in addition, or while you're doing your calculations, apart from the cost of the property, you will also need to take into your account your getting registered in the land registry. French, inscription de logements foncières. And this depends from canton to canton, and it includes the notary fee, who does the transaction, and the taxes involved in actually getting you registered as the new owner. The only way in Switzerland for you to become the owner of a property is to do it authentically through a notarial act. So there is no other way. So, if anyone suggests otherwise, that is not to be not to be accepted. Please don't do it. So yeah, that varies from around 3% in Valais. It's a little bit higher in Canton Vaud, but yeah, do check with your own commune and your own canton, wherever you're based and wherever you're looking. Okay, so when it comes to financing, there's lots of options, and it's occasionally it's easy to be subject to information overload. Everyone's selling mortgage rates, get the best deal. There's a number of websites that will help you with comparing, but nothing actually beats talking to a professional about it, and it will generally make it clearer and give you full understanding of both the rights and the responsibilities of your financing. So most people will have a bank, and for your day-to-day, and it's a great place to start, because you'll generally have a relationship with your bank and your bank manager or your financial consultant there. They'll understand your financial position. They'll understand how much you're getting paid via a salary or from your own business, and they'll be able to do the calculations fairly quickly. Now, banks are quite risk averse, so they will always make sure that their interests are covered first. For a primary residence, you should be able to take up to about 80% as a loan. For a secondary residence, as we discussed before, you're probably going to need about 30%, but that may be as low as 60 or even 50%, depending on the institution. So, in which case, it might be better, or also worth the comparison, because it is an important decision. This is not something that you can just buy and sell like you would, even a car. It is a major decision, will have ongoing impact. So talking to an independent financial consultant may be an option that you have to discover some other possibilities. They will do comparison between different banks, including your own potentially, find out the best terms and the best interest rates according to what you want. The financial consultant is generally receives a commission from the institution that you choose. Not always, but sometimes. So they will be looking to get a great deal for you, but they will also get paid for. There may be an hourly rate as well, depending on the complexity of the transaction, but that's something that they'll discuss with you, generally in a free first meeting session. So in addition to banks, they'll also look at options such as insurance companies and how you may use any value that you have in your second and third pension pillars. For primary residence, you can use the first, and for the second pillar, and for a secondary residence, you can use the value you have in your third pillar, but not the other way around. They can also bring in independent lenders. You could consider potentially as well a transaction between the vendor as well. Now, the financial consultants could actually be an interesting option if you are a freelancer or an independent worker. You're working on contracts, you have irregular income, and they will therefore be able to create a package which is where you don't have the safety and security of a regular salary. Okay, so investment. Now, this is the core of what we're talking about today. So probably most people, when they're talking about purchasing or investing in an Alpine property, there is an element of self-use. You want to use it as a holiday property, make some income on the side, which will give you, essentially pay for your property and give you free holidays. So, there's someone else coming. Thank you. Welcome, Claire. While you're investing, you can. Someone's got the microphone on, please. Is that someone on the chat?
No.
So yeah, there's a number of different possibilities. Now, we'll start at the bottom of the slide and work our way up. So if you want to use a property yourself, and then you want to rent the weeks around it, this is a great way of covering your costs. Do be aware though, that the highest earning weeks are probably also the same ones you want to use yourself. So Christmas, New Year, school holidays. So that will reduce your income a little bit. On the other hand, if you're a little bit flexible, and what we like about Switzerland is you have staggered holidays. Not everyone in the country has holidays at the same time. You can still benefit in both ways, both from a higher return and from using it yourself in the peak weeks. So an interesting way for people to make really good return in the winter time, particularly if you like to use the place yourself in the summer, is to put out on a seasonal rental. This year in Verbier, we've seen seasonal rentals rise between 10 and 20% over previous years. The asking prices have gone from high to verging on ridiculous, and you can really make a great chunk of your year's costs over the course of 5 months. What that does mean, of course, you don't necessarily get it yourself, or you can use the income to go on a holiday elsewhere. And then, with annual rentals, it's a nice, safe investment, and that would be when you're buying purely for investment. To be noted, depending on where you buy, this may be a fairly low return, but it's risk averse, it's generally safe, and you can count on the money being in your account each month, whether it's direct from the renter or through an agency who's managing it for you. Yep. Oh. So with your investment, now some people do like to buy brand new, some people like to buy where it's already renovated. If you are the kind of person who would like to add value to your property, you can buy a property that needs to be renovated, and things such as kitchens, bathrooms, painting, carpets or parquetry, all of these can add potential value both for your rental as well as for resale value. Now, we've got a little mention for Verbier estate management in there as well. So if anyone does have a property in Verbier, we do have a little management company which will help with securing the property, making sure it's clear of snow, the gardens are done, Christmas trees, ensuring the fridge is filled before you get there, and just generally keeping it in good condition for you while you're not there or while you're not able to come. So can we move on to taxes?
Oh, sorry.
Oh, taxes. Oh, okay. I thought we had some notes for taxes. Do we have notes for taxes?
No.
We don't have taxes. So taxes are another important part of the costs that are associated with. I thought we had a page for costs.
Is that's all?
Oh, I've done a big page of taxes.
No,
Okay, whoops. No taxes.
you didn't send it to me.
I did send it to you. So again, thank you for the impromptu nature of our chat. This is what we're kind of like at home as well. So yeah, some of the costs that will be associated with managing a property. You'll have obviously the building charges, which might include heating, water, and other utilities. Some of those may be included in the building, some of them will be private. Will include the cleaning, that will include the snow clearing, that will include just the insurance, and of course the management of it if there's a company managing it for the building. These vary greatly, and these are also something that you need to take into consideration when you're calculating the value of a property. Taxes, being Switzerland, there are any number of taxes. So some of the taxes you will need to consider is a holiday house, the taxe de séjour. taxe de séjour varies from resort to resort, and it's just a little earner on the side for the commune. You'll have wealth tax impôt sur fortune. If you can avoid that by having at least 50% in debt, and of course, any investments you make in the upkeep and well-being of your property are then taken into consideration and taken off. You'll have a perceived rental value of the property. Now, generally, this is a lot lower than the actual market value of a rental, but it will be added to your income as perceived income. Then you'll have smaller taxes, such as bin tax or communal tax, and these ones will just turn up, and of course TV tax, don't forget that. Okay, so once you've got your property, how do you start making some money from it? So talking on a holiday basis, the simplest platforms are Airbnb and Booking.com, and these are really easy to get signed up to. You don't need any real experience, although there are a few internal tricks and to help you managing the rentals and managing the income. There are, for example, also online rental managers where you can enter your information one time and have it distributed over 10, 15, 20 sites. So, excuse me. Now, the cost of these varies as well, depending on the platform. Airbnb only costs you 3%, but Booking.com, Expedia might cost you up to 15%. Now, this is a comparative with actually having a person, human company rental manager. Now, they might charge anywhere between 10 and 30%, depending on what the mandate is for them to do for you and your property. And you can always create your own website. If you need photos, I highly recommend Haute'Xposure. And can someone mute their mic, please?
Shall I?
Yep.
Okay.
So at this point, I'm going to pass back to
you. Feel free.
Oh, okay. At this point, we'd like to invite Erin Gaynor, who's the founder of the Ella Fund, to share a little bit with us. Erin is a fantastic inspiration, not just to us, but to many other people. She's an entrepreneur. She's one of the most highly educated humans I know, and she's a lovely, lovely person to boot. And she's doing some great work through the Ella Fund to empower a lot of young women through knowledge and business. So, Erin?
And the reason that I've asked Erin to join us is actually because Dave is doing this out of his own free time and everything. I felt that it would be wonderful that we could give back to at least an organization such as the Ella Fund and support other women who may not yet be in the position to be able to buy their own homes, but at least to empower them to step on the ladder of creating their own security and wealth. So, Erin, if you'd like to unmute yourself and tell us a little, and then after that, we'll go to a Q&A.
Great. Thank you so very much, Dave and Harry Angarad. It's an honor to be here. I know everyone is eager to speak about investing in real estate, so I will be brief. But it just seemed quite appropriate. You know, here we're talking about women investing in their own potential property, you know, in building their own asset base. And we at the Ella Fund, what we do is we invest in girls and women. We are a philanthropy fund that I created about 4 years ago now. And, you know, it's been endowed personally, and we invest in projects, in entrepreneurs, in initiatives around the world. as long as their goal and the outcome is really to enhance and empower women's lives. So we've got quite a big range of investments, some here in Switzerland, some in Sub-Saharan Africa, in Asia. And just in a brief nutshell, I'll tell you about one that is in Senegal, actually in West Africa. About 18 months ago, we supported a competition for social entrepreneurs who would come up with ideas for innovations to improve maternal health, basically to help prevent women dying during childbirth and pregnancy. This is obviously, greatly in line with our values at the Ella Fund, and as part of that competition called Innovating for Mothers, we received some fantastic proposals, and the winner of the competition is a group in Saint-Louis in the north of Senegal called Agora. And Agora has worked over the past year to set up a service to enable pregnant women to identify, or pregnancies with complications to be identified early on. And then they have a transport service and a maternal waiting home to allow women who live in rural areas to hopefully be able to give birth in a much more secure environment. So we just put the plug up here. We have financed the development of this project, but there are some women locally who are not able to afford the even very nominal fee that is asked of them. So if anyone on this call, is eager to support investing women and girls through this project, feel free to go to this link and make a donation to that project. So thanks again. And I'm sure all of the real estate questions have piled up, but again, so happy to be here.
Yes, they have. And so, yeah, as I say, the reason that I've brought Erin in is because, yes, it's about not just empowering ourselves, but it's about passing it on where possible. So just before we go to the Q&A, I'd also like to thank Mountain Hub. Dave and I are currently installed in the meeting room here at Mountain Hub Verbier, where Dave actually has his office. It's a co-working space and business lounge. But I spend a lot of time just hanging out because they're just all so nice. But
And we've got good coffee.
do we? I don't drink coffee. So anyway, so I'm going to stop sharing the PowerPoint, but you can reach either Dave or myself at these numbers and emails. So yeah, let's go to the chat. So I'm going to just stop sharing, and I've now got, where have I got questions? Oh gosh, they're so small. Okay. Your eyesight is probably better than mine.
I've got my glasses here if necessary.
Oh, I've gone and lost the chat now. Oops. Oh dear. This is okay. So let's see.
Well, Melinda was the first one.
Yes, Melinda. Where was it? What the 1 million mortgage figure represents, is that the value of the new holiday flat or part of the outgoings from an existing mortgage? The sums didn't add up for me. Just wanted to clarify the basis. So yeah, would you like to go through that one again? Shall I go back? Do you want me to go back to the slide?
Why don't you go back to the slide?
Okay.
So I understand the principle you're making. I just didn't understand how the sums were calculated. So if you wouldn't mind explaining that basis of $1 million, I just didn't connect the 30% to the capital you would give as a down payment versus the 30% of your outgoings. That didn't connect for me.
Okay, so they're actually two different things, and this is great feedback for us, Melinda. This will help us, if you like, refine any future numbers and examples that we're doing in order to make it clearer for you to understand. So I actually took them as two separate things. So what the money you would need is 30%. And then I didn't actually apply it to the mortgage. I just used an example of a mortgage of 1 million.
Of the holiday flat, you mean?
Yeah, exactly. Well, that would apply actually to any mortgage. The calculation of the rule of three there. So
Would you have the slide to hand? I think it might be easier to clarify.
Yeah, sure.
Share the screen.
I need to wait. I need to share the screen as well. Share screen. There we go. Share. Yep.
okay.
You can see that now, Melinda?
Yeah.
Super.
So, okay, 30% of a million is not any of these figures listed here. So I'm trying to understand, or you mean it's the 165?
No, so Melinda, as I said just before, so they're two separate parts of the equation. So a 30% in cash would be required. Now, we're not talking about a purchase of $1 million, we're talking about a mortgage of $1 million. So if you were talking about a mortgage of $1 million, that's in addition to whatever money you had brought to the table as your own deposit. So that's just for calculating the repayments.
Okay, so we're mixing affordability with actual mortgage. So I think it might be helpful to understand, yeah, the whole picture, because if you are already to the point where a mortgage is $1 million, that doesn't include your 30%.
Yeah. Okay. So perhaps the example I should have taken was a property purchase of $1 million. Okay. In which case you would need 30% down, so 300,000. Okay. Leaving a financial or hypothèque, a mortgage of 700,000. Okay. So then what we would do, we would apply 700,000, a hypothetical interest rate of 5%. So the calculations in my head, 35,000. Then you would need to add on the cost of the PPE if it's an apartment building, or around 1% for maintenance if it's a private chalet. So that's 1% of 1 million. Okay, we'll use that as a hypothetical. So 10,000, we're up to 45,000. So you would need to demonstrate an income of 3 times 45,000. So 135,000. And that's gross income. So before tax, in addition to 300,000 of fonds propres, or cash, essentially cash, to make the deposit on the property. How's that?
Does that have with your outgoing?
Sorry, Melinda, I
can't hear you. Are you able to speak up a little, please?
Because Melinda, I will perfectly understand. I will say I personally can't hear numbers. So if it isn't coming across clearly, what we can do is always drop a message in a chat and run through it, or go through it in an email at a later point. Because as soon as people mention any numbers, my mind just shuts down. I don't hear them.
No, it's probably easier for that one for you and I to chat through, privately, rather than show the workings on paper or on actually written down. Yeah, is that okay?
Yeah, I think the speaker is interfering with when other people try to talk, but I'm happy to.
I'm sorry, I can't hear you. You keep dropping out a little.
Okay.
Okay.
Well, if that one's okay, Melinda, can we move on? We'll move on to the next.
Yeah. So someone was asking, what is the best way to advertise a seasonal rental?
Excellent question. Excellent question. Depending on where the seasonal rental is, right? quite often the best way is just simply through social media. And what we find in Verbier, there's probably 3 or 4 different groups with varying numbers of participants, and you can advertise your seasonal rental there. It's great because it costs you absolutely nothing. You can do it for free. You can also filter the responses, and you can also see generally on the same groups what other people are offering their properties for. So that is where I would suggest doing a seasonal rental for. Other options through classic agencies. So even your basic real estate agencies, I will say, such as Omnia, we don't actually do seasonal rentals. We only concentrate on sales in Verbier. But any of the agencies around, they'll do it. And they'll, for a seasonal rental, they'll generally take around 20% of the overall revenue. The other option is through a specialized rental agency. And in every resort, there are specialized rental agencies who will be able to offer either a solution of holiday or seasonal properties. And again, the rate will vary probably between 15 and 25% for a season.
Yeah. That was for Sarah. And Belinda asked another question about the PPE, because of course, we must remember that not everybody is necessarily from the French part of Switzerland. So how would you explain a PPE in English to the to the German speakers? And I don't think we have anyone from the Italian part. So,
okay.
But yeah,
what
is a PPE?
So a PPE is a propriété par étage. So what it actually means is a co-propriety, or I think the English, certainly the Australian version, is a body corporate. So it's an entity that includes or that covers more than one property on a single plot or on numerous plots. And it is a way where you can calculate a communal and private ownership of an overall, excuse me, I'm thinking in French because I studied it in French, of course. An overall, let's use the word building, for example. So if you have an apartment building with four apartments in it, each of them is a PPE lot. And so the PPE lot is private. It can be traded. It can be, you can do whatever you like with it, as opposed to if you rent something, you can only do what the owner says. So for the PPE, then you'll pay a certain amount for communal areas. Now, communal areas might include gardens, hallways, laundry, passageways, the roof, the outside of the building. And these are things that everyone who is part of the PPE contribute to ensure that the whole remains in good condition and in good wear and tear.
And basically every year your PPE will also send you an invoice, and you have to pay a percentage according to the size of your property.
Yeah.
Many years ago, I had an apartment here, and that was the same case. And PPEs are not just in holiday resorts, but they're also in all the cities.
It's the most popular form. It's the most popular form,
yeah,
and the most relevant form of the division of multiple occupancy properties. The PPE. Generally, what they'll also do is they'll have a renovation fund to finance repairs and ongoing maintenance. Yeah.
Okay.
Okay.
Aaron is actually asking a question. Oh. Given the recent price inflation in Verbier, does it make more sense to invest in neighboring Fort Valley villages, e.g. Nanda, or do the high holiday rental prices make Verbier more attractive?
Well, the answer to that is a little bit of yes and yes. Verbier is driving everything. And so what that is doing is it's dragging the high-end money into Verbier. And what we're hoping in the market is that will also lift up the surrounding resorts, such as Busan, such as Latsuma, such as Nonda, Vesona, because these are all connected to, and people want the proximity, but won't necessarily have the budget for Verbier. They can get a lot more bang for the buck by investing in one of the nearby, but still adjoining resorts. So yes, this is good. This is good also for Verbier because it's creating value, it's creating wealth. We don't feel there will be a crash here because Verbier is a little bit immune to a middle class kind of influence. And so the rents have also been rising. And this means that what are generally historically low rental returns in Verbier are actually coming up in line with the market value. So
then kind of the next real question is, do you have any insight into holiday flats? And this is also from Melinda, in non-touristic areas. So Oberwalden, the fact that Dave is based here in Valley, he doesn't have the experience of non-Valaisan areas from that perspective. But within the Valley region, what about holiday flats in less touristy locations here in Valley? So we could apply the same principle, essentially.
Okay, so well, as I mentioned at the start, and my speciality is in the touristy areas, and being a foreigner in Switzerland, as many of us are, this allows me to work closely with not just foreign guys, but with Swiss as well. I do have some exposure to the non-holiday market, but not as much. So I will say though, I do apologize. I don't have any experience in Obwalden. I really can't offer any advice as to what the market is doing there.
But like, for example, you've had some properties recently that throughout Valley that are less tourist based.
This is true. So
but kind of close to the tourist regions.
Yeah. So yeah, I suppose yes, you have indirect, you have access to, but it is a little bit mixed with people who are actually living and working in the areas. So there is strong growth across the Swiss market. It is steadily climbing, and that's being fueled on the low interest rates, the relatively reasonable rental rates and returns, and historically low return from having your money in the bank. So if your sums add up, and you can make a benefit from it over your cost, your revenue exceeds your costs, it can still be an interesting investment. Plus you have the possibility of capital growth, which is and has been steadily increasing over the last few years.
Okay.
Okay.
Yeah, and then I think we possibly have time just for two more questions.
Oh,
and
we've got another one from.
Yeah, what about Le Chab? What about Le Chab and the Bagnères Valley? So not Verbier, but very much that kind of out of the more expensive ski resorts, but that still have access to good skiing.
Yeah.
And it doesn't even have to be specifically Le Chab. Jennifer Robertson does mention it, but
Well, I mean, Jennifer, it's a great example, and it's certainly one we can speak about with authority. And what the trend has been over probably the last 10 to 15 years is that the people who are serving Verbier, working Verbier, can't necessarily afford to live in Verbier, or they've come here as singles and couples and become families, and they require more space and they require more facilities. So there has been, you know, a strong movement from Verbier to Le Chab, and from Le Chab, that has also expanded throughout the Val de Bagne, and now Volège is now in a great deal of growth, as is Prairie, Versagère, and even pushing up and out a little bit further because of the affordability, up towards Champsec, Lautier, and even as far around as Saint-Branché and Orsières. So there is, again, like we were talking about with the other resorts, it is, do you need to plug that in?
I can't.
You can't? Okay, so it looks like we may drop out fairly soon, because we didn't expect this to go quite so long. We haven't got so much battery. But yes, Verbier is still driving this, and the more money Verbier generates, the more services it requires and the more housing that then requires in the surrounding areas.
But we also have resorts outside of this particular area, such as Brimance and Nax. Just very quickly, just a quick
plug.
Yeah.
So, okay, yeah. So yeah, other resorts are becoming more attractive again as well, because you get a lot more property for your investment, and there's also a little bit of trend of people wanting to move to the mountains, either to retire or once the kids are grown up, and they're looking for a lifestyle which doesn't necessarily revolve around the city, or being able to benefit from lower taxes in valet and keep a small apartment in the city, which they can use, you know, whether during the week when they have to be in the office, or, you know, for entertainment purposes.
So I think we'll wrap it up there. I'd like to say thank you very much for the amazing response from everybody. I hope to be able to take this recording and be able to share it with everybody.
So our mistakes.
Well, I'm not sure that's going to be that possible, but in any case, I'd like to say thank you to everybody for showing up and for your wonderful questions, and also for, even during the process, your great feedback. As it's our first one, there have been some interesting challenges that you have noticed, and others that you haven't even noticed. Okay. So I'd say thank you so much. And if there's anything, do get in touch.
No, I'd just like to respond to one more question from Sarah.
We don't have time, sweetie.
Okay.
It's going to die.
Okay. Well, apparently we're going to die.
So
let's do this another time. And it's been great to be here with everyone. Thank you so much for involving us in Women Rock Switzerland and being able to share a little bit of information. If you'd like any more, please contact us privately and we'll happily discuss with you at any time.
So thank you, and have a lovely evening. Bye.